Rodkusen and Spoolman for risk. Just a few additional home run patterns where we're using the new indicator. And this particular date, 10-4, had a lot of volatility. The threshold for the first standard deviation is shown here. The second shown here. Let's look at how this system handled that kind of volatility. The first overbought condition shows up right there, right at the top. Excellent opportunity to get into this short trade. And you don't really get an oversold condition until precisely at the bottom. Right there. For all to see. Now, we fully expect that this market is going to continue to move down. But why a individual would be concerned about taking that is because of this this little bar right in there. That's a little high. Now, ultimately, it turns out to be divergent. However, the fact remains that this market is moving down. We won't even go into the market profile on that particular day. We just want to show you the accuracy of the indicator. But all things having been said, this big drop oftentimes is associated with a corresponding move back up because there's hardly any volume to really provide any kind of a support level down here. And for that reason, we oftentimes see a move back up, particularly that bar. This is these are 10-second bars. Look at how big that bar is right in there. And then we have another one right over here. Let's see what happened. Now, all that having been said, we've got an oversold condition that shows up right there at the bottom. And we've got another oversold higher low there. So you've got room to enter into this trade, knowing all the time that your threshold level is down here at 42.50. And then what happens? You get a overbought condition right there, and down we come. We get another oversold condition right here, right at the bottom. But that's a big bar down, so you have good reason to expect that this is going to come back. It's going to come back down. Another opportunity to get into a little bit of a rally right there. And then ultimately, you're overbought right there at the top. And she comes down, messes around here, and begins to come back down again. Then you move right into this ascending low value projection, low value area here. You're oversold once again. You're oversold here, so there's a good opportunity to just take some profits to get into this trade. And then overbought once again over here, and over there. It's all overbought. And then down she comes, and you finally get right into this projection at 42.50, right down in here. Now it doesn't quite make it. It's 42.75. It's 42.75, but it is oversold there. But shortly thereafter, it's overbought again right here, and down we come to this initial low at 12.25. Okay, so it moves much lower. However, the second standard deviation line is actually at 37.25. You haven't reached it there, and very difficult to say whether or not that might in fact take place, because you've got a big heads up right in here. Okay, there's a big heads up of a potential return to this price up here at 52.75. Okay, it's above that line, but that's about where it's at. So right now you really don't know, and it's 12:30, and that's oftentimes a good opportunity for a yellow day pattern to arise. But look what happens. Okay? The premium, as we move down to this oversold condition, we stair step down here. Then it starts to move up a little bit more here. But then ultimately, right at the top there, look at where the premium is. It's way down here. I can't see that line real well, but that's all right. You see the evidence there for an overbought condition. And down we come again. And then this oversold condition is below the threshold line. It's below that threshold line. And we finally get divergent right in here at 2 o'clock. And a good opportunity to exit that trade and call it quits. Back it goes. Now, it doesn't show up there. Let me extend that out a little further. Just so you see it. Okay, there we go. So you've got an oversold condition right in here. Oops, pardon me. Right there. There's your oversold condition right there. And the divergence on the premium that we talk about. Big divergence there. And this thing should be rallying up, which in fact it ultimately does. So, nicely handled. Beautiful opportunities for trading. You can't, you really, it just doesn't get much better than this. Now, with all due respect to the system, we are using a right strength on the pivots that's fairly large, so that we don't have quite as much noise. And some of that noise, you know, that can fool you at times. But by the same token, you've got some real strong basis for executing your trades using this particular system. It's going to be a little bit more busy as the market is rallying up. But for example, this high here, all right, it's right at right smack dab at a point of control. You would anticipate something happening there, and you do, because you've got this big divergence that forms. So any one of these trades was enough to be good for the day, let alone be good all day long, which is what you've got. So pick a time, any time, you can trade this thing. All right, let's just show you one more example. Now I'm going to look back and see if we can't find a particularly difficult day. We've got a lot of volatility. Well, this looks good because we hit both. Yeah, this could be very interesting because you not only hit the second standard deviation here, but you went back to the second standard deviation up here. Something had to tell you that. Let's take a look at 928. And what we're going to look for is to see whether or not the premium gave us evidence that this thing was liable to come back. Now, it might not. I don't know. I'm just going to come to that date and we're going to take a look. We're going to let the system do what it's designed to do and see how this looks. But this is one whale of a day. You got a low here at 40, roughly at 44, all the way up to a high of 63. That's not too bad. So let's just see how this performs. Let's see if we can't nail the low here and nail a good opportunity for shorting it, as well as moving all the way back, you know, to my goodness, 63-ish, right in there. So let's go to 628. So just so you see, we're not futzing with everything. We're just going to do this live. Okay. All right. Oh, let's go back and just draw where these support levels are. Okay, we've got 48.75 and pardon me, let me read that again. Get it down there to, okay, that's 48.50. And then 48.50 and 45.75. 48.50 and 45.75. Okay, that's just our points of reference, and then we have one way up there at 63. So it's the chart. So let's bring this down. Okay. All right, first overbought condition, right up there again. Now we have an oversold condition here. And it takes us right back up to the top. We're overbought once again. So the market is coming down. And what we look for, in particular on the premium, is a significant divergence in the premium. Okay? Now we can tailor this so we can show you a true OS condition, but whether it's labeled that way or not, it's going to wind up being the same thing, because all we're doing is using a different labeling system depending upon where we're starting. And we often recommend that we adjust our start time when we see the OS levels or the OB levels exceeding the HT or the LT levels. So just as an example, if we change, since this is really a big bar down, and even though it's divergent, it's a very strong barometer of the fact that this is still going to move down lower. And that's what that premium is telling us. We really want to short this thing because it's coming right back. So if we change our start time to 9:52, okay, what will happen is that this will become an LT, and this will be just a good old-fashioned OS, oversold condition, right there at the low. So not only did you break the initial low projection at 48.50, you broke it at 45.50, and you had a good reason to short that right in here, because look at how the premium dropped to this overbought condition right there. So if you just want to show you what that looks like, we change over to 9:52 for the start time, and that just changes the labeling. Doesn't change how we read it. See? Whether it shows up as an OSLL or just a simple OS. Same thing is true. It's right there at the bottom. Okay. Now, in another OS situation up here. Now the question is, was there really anything to expect that this market was going to go back up? And yes, there is, and it's this bar. Okay, this big bar up there, even though we find ourselves divergent, is really showing us. And let me just see about this. Oh, this bar, pardon me. This one as well. That's indicating that this market is going to come back on us. Here and here. These are very high bars, and furthermore, you've got a developing long trend here. So yes, you've got a big divergence, pardon me, you've got a big bar down here, you get a big bar up here, which is going to happen first is always hard to say, but you were divergent, if you recall. And then this is our low, and now you're looking to buy and hold that thing. Good reason to hold it at least all the way here, secondary up here. And what happens? No problem. You get right up there and you become overbought, and down she comes again. See the OB situation? You get higher still, you get overbought. Down she comes. Now, this low here, it's an oversold situation, and it's a fairly good-sized bar down. That might imply that this market could be coming back at us. So you really have to be careful about that. And rather than trading that, I would recommend shorting the overbought situation. But as you do, you get the oversold condition right down here, and up the market goes. So this is not always to be read as a naked bar. Now down here, that was a different story. And then you got your oversold condition. So ultimately, this is lower than that, and that would definitely be a cause for concern. But you get oversold again right in here, and another opportunity to ride this thing up, because see how these high bars on the premium are forming in here, and in here, and way back in here. There's some indication that this is moving up a little bit, but there's not much to work with, not right now. So at best, you've got an oversold condition here, and nothing really strong as an indicator, other than way back here at that time. But these highs are now dropping below that level. Okay. And we got nothing else to work with other than really starting the process over again and reading it from there. But we don't need to do that. Just read it. Read what the premium says. So, oversold here, you get a higher low, okay, but a lower low on the premium, and that's a cause for some concern. There's no doubt about it. It's higher than it is here, and that's helpful, but it's lower than it was there. This is out of sync, so we've got to be very careful that this market might not continue to move up, but in fact could move back down to these levels. So what do you do in that instance? You watch the premium. You look for some divergence here. And you don't really get it until it's already way up here. Then you get overbought, comes down a bit, and you step up. Look at the oversold condition here. It moves down as it should, and then finally gets into an oversold condition right up there, and we start moving higher once again. And finally, the market really takes off and brings us up to a new high. Expect that to go higher. It does, and when it finally reaches the 63 level, right up there, we're overbought. And what a whale of a ride. Very nicely done. Very nicely done. We can teach you how to read this and read it right. There was nothing wrong about the way this was played this day. You just have to understand how to read the premium in the right way. And this can help you to do so. So come take a demo. Better yet, learn how to do this and apply it. This is our home run. Nice low, big drop, huge profits. Nice move up, huge profits. All the way back up. There you have it. I'm Rod Kusin, Spoo Man for Risk.